Welcome to Money Convos, where we discuss personal finance and investment tips. We are committed to helping people create wealth and achieve financial freedom. Follow us on Twitter, Instagram, Clubhouse, and Facebook, and subscribe to our YouTube and podcast. Alright then, let's head into today's conversation.
Welcome to another episode of Money Convos, and today we are talking about something very crucial: emergency funds. As you know, living in very unpredictable economic times, and having an emergency fund can truly be a game changer for you. So whether you started working or you just started working just like me, or have been around the block for a while, this episode is meant to make you understand why an emergency fund is sort of a non-negotiable in today's world, and to be very specific, in our economic climate in Ghana. So today I have with me Edem, as always, to discuss this topic, basically go into the basics and see why it is important to have an emergency fund in our economic situation. So let's kick things off. An emergency fund, we basically a stash of cash or money that you set aside specifically for unexpected expenses. So you would normally hear the term save for a rainy day. It's exactly what the emergency fund is expected to do. It's supposed to cater for costs that pop out of nowhere. It could be car repairs, it could be medical bills, it could be job loss. The whole point of this is to give yourself a cushion, a financial cushion, where you don't have to rely on debt or your family or any other person, or whenever life decides to throw you a curveball, to sort yourself out of some of these situations. So I would say, in a nutshell, that's what an emergency fund is, and that's what it's supposed to do. I think one of the most pressing things that we have in the economic climate is the difficulty in building and maintaining an emergency fund. And I'm sure, Adam, you've also realized this problem we have in Ghana, whether it's systematic, whether it's subjective. It's a matter of discussion. But Adam, I don't know whether you have any thoughts on why you think it's difficult for people to build and maintain an emergency fund, particularly in Ghana.
Yeah, Dennis, so sorry about the earlier hiccup. My connection dropped a bit. So to box the two together, I think you basically talked about what an emergency fund is. The fact that it's more like a rainy day fund, or some money you set aside for things that you do not expect, or unexpected events or unexpected expenses that may pop up one way or the other. Now, as to why a lot of people maybe in our climate do not have that kind of emergency fund, one thing that readily comes to my mind is the fact that some income levels are low generally. If you look at our context here, that could be one reason, even though subsequently when we go into details, we would realize that even if your income level is low, you should still try and build that thing. But I think that is generally one thing that people use as a reason why they do not have an emergency fund, so that their income, they can barely scrap all through the month, let alone talk about having an emergency fund. Then also, I think that the understanding generally is not there with a lot of people. That's also another challenge, where people do not have the kind of understanding about the need for an emergency fund, where people basically don't even grasp the concept, okay? But they are just living as the day goes by, like one day at a time and all of that. So that is also another challenge, okay? So the fact that people do not understand the concept or do not even see the need for it because they've not been exposed to realize that it's something they can build up and have, which will assist them in times of trouble. Yeah, so these are two already examples that come to mind, or reasons that come to mind as to the challenge we face in our part of the world concerning having emergency funds. Yeah.
Yeah, and I think the second point you mentioned makes a lot of sense, because one basic thing that hinders this progress when it comes to emergency fund is life itself. Life happens here and there. And so people, especially in poorer countries, people tend to focus on immediate needs like paying off bills, paying off school fees, buying of gadgets for the house, marriage, a lot of things. And for a lot of people, every day is an emergency. So they don't see the need for saving for something that might happen in the future. And so it's really a worry in our part of the world where every day is a struggle for someone. Why would they have to save for an emergency that will happen for the future, So I think the part about the low income also fits into this. Low income, not enough money to go around. Every day is an emergency for the person. And so they need to even have some money saved, which they don't touch at all for an emergency, doesn't occur to them. So I think it's a very brilliant point that you mentioned. And regardless of that, we want to hammer on the point that emergency funds are very critical, even more so now when economic crises are happening, there are economic uncertainties. Take this year, for example, a lot of elections happening around the world. It could go anywhere. The markets could go anywhere. Economies could go anywhere. And so with all these problems, rising inflation experienced in Ghana, our friends in Nigeria are experiencing rising inflation. There could be potential layoffs in jobs, a lot of problems. Would you say that the importance of emergency fund is more critical now than ever before? Or would you say at some point in time in the not distant past, emergency funds were more critical? I don't know your thoughts on this, Eden.
I think if we go back to our definition when we were talking about it, the fact that emergency funds are supposed to deal with, how do I call it, unplanned events or uncertainties in the future, it presupposes that when we are in a season or in a period of uncertainty, then it means that the need is even more real, or it's something that is much, much, much more important during that period, because the situation is very fluid and that things can just spring up at any time with little kind of warning, okay, and things can just get out of hand at any time. So when we are in an uncertain time or in an economic turmoil, it's quite ironic because during that period, you would expect that, because we're in an economic turmoil and then things are expensive and what have you, so that's the time where we have to even maybe, because the money is not even going round and everything, like we are barely able to maybe even make ends meet. But it's even that period that you even need more to ensure that you have an emergency fund, because things can go south very easily. And when they do go south, you would need that buffer to be able to rely on or fall back on to be able to bring you back in line. Okay, so within at every time it's important, but I think that the need is even more apparent when we end up in uncertain times, or when we fall into times where things are very, very uncertain, like we are in now, especially post-COVID. And during the COVID period, I think that's when a number of people realized even the need for these things we've been talking about for some time. Okay, because some people all of a sudden realized they were out of jobs. Others, even though they kept their jobs, had reduced incomes, reduced salaries, some halved or taking some kind of a haircut in their salaries. So this is the time, that was the time, and then even since then up till now, is when we realize that, look, we really need these emergency funds for ourselves so we can fall back on them. Yeah.
Yeah, I completely agree. Our vulnerability now to these financial hits makes it even more important. You could say maybe an emergency fund was nice to have sometime in the past. It was sort of a luxury, or it's nice to say, oh, I have an emergency fund. Oh, cool. But now it's an absolute necessity, because what happens if you lose your job? What happens if an unexpected health issue arises? You need a buffer, and not just a small buffer. And we'll get to that point in a while, but you need a buffer, a cushion, something that can cushion you, for some to cover for these emergencies. And with that in mind, you could ask yourself this question. If you had sort of 10,000 or 100,000 unexpected expense tomorrow, how would you handle it? And your answer to that question would determine if you really have an emergency fund that can help you in such situations. And so, think about some of these things. Would you dip into your savings? We know credit cards are not common in our part of the world, so it will be hard to get credit from that end. It's more common to borrow from friends, but how many of our friends give us nowadays? So it's good to think about some of these things once in a while. If I had this much of unexpected expense, how would I cover for it? Do I really have rich friends or rich aunties or rich uncles to cover for me? And these are the realities people go through every day, and we are not cushioned from some of these problems. They could also happen to us. So it's good to prepare for some of these before they happen to us. And so it brings us to the question, the $1 million question, which is, how much should you save? And so it's important to have an emergency fund, but how much of an emergency fund should you have? And Adam, I think there's a general rule of thumb that we've been mentioning on the podcast for a long time, but it would be great if you could repeat it for our audience so that we could discuss it.
Yes. How much is significant, or how much is adequate as an emergency fund is actually very, very dependent on the individual and his circumstances. But there are some rules of thumb that are generally thrown out there, basically from finance experts and what have you, and for us to use generally. Okay, we normally say you should have 3 to 6 months worth of living expenses, okay, as your emergency fund. So it can range from anywhere from 3 months to 6 months worth of living expenses as your emergency fund. I think that some people might have to have more, and maybe as for less, I don't think about less, but I think 3 is okay as the minimum. But as you go on, depending on the risk that you are exposed to, would also determine how much you should stack up. Okay, but probably also you should not have too much, because I think when we go forward, we would explain how to build it, and then also the utilization and what have you. So you don't want to also put too much money in an emergency fund too, because then again, finance is also a numbers game. We are trying to get the best out of our resources, so you don't want to stash too much into an emergency fund, and then the opportunity cost of that will not be, will be detrimental to you. So basically, as a rule of thumb, minimum about 3 months to 6 months maximum, normally maximum, but it could go up a bit, maybe to 7, 8, maybe 9 months. But I think probably beyond 9 months might be a stretch, maybe unless you are in a very volatile kind of work. That is when you might want to go to maybe 9 months or 1 year kind of emergency fund. Yeah.
Yeah, thank you so much for repeating that for us. And it's true. We often repeat that the rule of thumb is to have at least 3 to 6 months. But as Adam said, yours could be more, because comparing a salaried worker with a freelancer whose income is irregular, you may need to save more when you get more, because for you, when you don't have a job, every day is an emergency, just like we said. But for a salaried worker, at least they know that every month this is how much they are getting and they can plan for it. So although the rule of thumb is to save between 3 to 6 months, you have the freedom to determine how much is your emergency fund. And to figure that out, just take a look at your budget, right? Think of the regular expenses, the rent, the groceries, the utilities, the transportation, the budget that you have. And if, the budget, you don't have a budget, you can listen to our previous episodes on how to create a budget. And we also have a budget template we share. So if you would like the budget template to guide you in preparing your budget, please send us a DM and we will respond to you. And so basically, take a look at your budget, your monthly budget. If you have your monthly budget, just multiply that by 3 or 6. Now you have the emergency fund or your emergency fund that you should save for, and save towards that goal. And so it's a simple process. It's difficult to do sometimes, but you can get started on that journey and you could cushion yourself for future uncertainties. And Adam, this question I reserved it specially for you because of your affection for Dave Ramsey's show. So let's say I don't have an emergency fund, but I also have a debt. I also have debt, a lot of debt. Which one should I prioritize? Build my emergency fund or pay off my debt?
Okay, so as you mentioned Dave Ramsey there, now I have the liberty to quote from from him. If you follow the baby steps, okay, the baby steps. The first step is to have $1,000 investment, emergency fund. So if you bring it into our setting, I remember having a conversation with Elikem about how we can tweak the baby steps into the Ghanaian context, because we know that we are in different contexts. So I would say the first step will be to have the first level or the first level of emergency fund. Okay, so have some amount of, not the 3 months we are talking about. You would normally want to have some amount of money in your investment, in your emergency fund. So maybe in Ghanaian context, $1,000 would have been 16,000 cedis, but that is way beyond the reach of so many people who are working. So probably if you want to have that first level emergency fund, I might say put aside 1,000 cedis or 2,000 cedis as your first step. Then you start to tackle all your debts. It's after you have tackled your debts, then you come and ensure that you start to build your emergency fund, because the thing with debt is that it keeps compounding. You are building up more interest as long as you are not tackling it. So it's important to tackle it as much as possible. I've also read other people suggest you tackle the two at the same time. But I don't know. Any one of them that works for you, because some to give I read just earlier on today, an advice was being given that you should tackle the two. So the amounts you would have been putting aside, you split it into two. You tackle debt first, tackle debt with half, and then your emergency fund with the other. I think maybe if you run the numbers, you can look at which one best suits it. But I think I tend to lean towards trying to get rid of your debt as quickly as possible, then building your emergency fund. But before you start to do that, you should have that minimum level of emergency fund. So some 1,000 cedis or 2,000 cedis away to handle basic emergencies, so that you are not too bare. You understand? You don't also have no cover. But the idea of that minimum emergency fund is not supposed to cater for all your kinds of emergencies. It's just so that maybe if you run out of something and you need some money, you can fall onto it and use it to sort it out quickly and then get back to your life. But it's not supposed to be that cushion for you that, for example, if you lose your job, that 1,000 cedis is not supposed to be what will take care of you. But it is a process, it's a step, the first step in building towards financial freedom. Yeah.
I think that's brilliant. That's brilliant. I never thought of it that way. Customizing Dave Ramsey's baby steps into the Ghanaian context, but I think that's very brilliant what we came up with. Having some sort of cushion, I can relate to that, especially in our context. I mean, the expenses can come from anywhere. So have a small cushion, pay off your debt, and the debt component, some of them have high interest rates and all of that. And that's why I love the first one. Personally, I love the first one because have something small. What if the debt you are paying off, something goes off or something happens within that time and you have nothing to cater for it, It will be good to have something small. Eden mentioned 1,000 or 2,000 cedis, but yours could be more. What do you know? So it's good to have a cushion, pay off the debt, and then start building your original emergency fund. I think that's brilliant. As Adam said, you can consider both paying off your debt, along with building your emergency fund concurrently, or putting something aside, paying your debt, and then start building your emergency fund. They are both good options for you. So speak to your investment advisor, speak to your investment house, speak to anyone that advises on your finances, run the numbers, get to do the numbers for yourself and see which option is best for you. As always, some of these things, you need to customize them to your unique situations, right? Yeah. So, Adam, I think you mentioned a point earlier about how we can build an emergency fund. And so, practically, let's say someone is just starting out with little or no savings. What practical steps can they take to build an emergency fund if they're on a tight budget? So say the person earns 2,000 cedis a month. How do they even start by building the emergency fund that they want?
Okay, then. So as we said, the emergency fund, when sometimes people hear emergency fund, I think their mind goes to like the way we have Get Fund, Petroleum Revenue Fund, those big things. So they are expecting some huge amounts of money to be in it, or maybe some International Monetary Fund or something. But a fund is just money that you have stashed in a place. So yes, it doesn't matter how much you are earning in a certain sense. We know that when you look at our economic situation now, maybe you are on a salary of about 2,000 cedis and it can barely take you to the end of the month. So what will you do? First thing is to set your goal and your targets. Okay, that's the most important thing. So, like I said, maybe you are just starting, you've just heard this, okay? Then maybe your first step will be to build that minimum emergency fund I talked about in my earlier submission, where maybe, for example, you can set a target of, let's say, 1,000 cedis, so that I'm going to build up to 1,000 cedis. And if anything should come up, I'm going to fall on that kind of money. Okay, that means that your cover is just up to 1,000 cedis. So you cannot deal with emergencies that are huge or bigger than 1,000 cedis. So you work towards that. And the idea is that once you have set a target, that should be able to motivate you to start to save gradually. I would actually advise that you put that money separately from your regular monies that you've been spending. So if you receive your money, you are paid and you get it into your account, okay, you should have maybe a different account. Prior to our issues here in Ghana, I used to recommend people to open some of these money market funds, but with the way things happened over the last few years, it's a bit difficult to recommend because liquidity has become a problem. And the most important thing about emergency funds is that they should be quite liquid enough for you to be able to rely on it. Else, it's not an emergency fund again. It's just a saving. So probably you should look for just a normal savings account. The goal is not to make returns on that. That is why it's called an emergency fund. The goal for it is not maximum returns. It's just so that if something should happen, I should be able to have access to this money. But in the same way, too, you don't want it to be too accessible so that when any small thing that happens to you, you go and take it. So we need to find a clear balance between accessibility and liquidity. It should not be so accessible. At the same time, it should also be within reach when the emergency happens, else it will not serve its purpose again. So make sure that you find a savings account with a bank or something, and then what you can do is that you won't have maybe ATM card for it. You can just decide that it's only a checkbook or something, so that you would have to walk into a banking hall to withdraw. Then the challenge arises that should the emergency happen over the weekend and the banking hall is not open, what do I do? So these are all the balances you would have to look at it, the nuances. Okay. So, but starting out, you don't want to be able to access that money very easily. At the same time, too, you also want it to be accessible when you need it. So you need to find a fine balance between it, because some people I know, when they have an ATM for that account, forget the money is part of the regular pool they are going to be spending from. So know yourself. For some of us, we could have the ATM card, we will not touch it. For some people, you would have it and it's a temptation. So know yourself, and then you know the blend, how you can go about it, so that it's quite easy for you to withdraw also. Then also regularly ensure that you are moving money to it every month. Okay, so every month, if it is 50 cedis you want to decide to start with, okay, you can do that. It means that if you are doing 50 cedis every month, you are gradually building it up. Okay, maybe you can do 100 cedis, you can do 200 cedis every month, and then you are putting it into that account. Over time, you would hit that your first target of maybe 1,000 or 2,000, and then you can now move it to, let's say, the 1 month living expenses, depending on what your circumstance is. Then you try hit two months, then you now move to 3 months. This process could take you a year, 2 years to be able to finally get that kind of cushion in terms of 3 months cover. Okay, so it's not how do they call it? A walk in the park. It's quite a disciplinary process. You need to discipline yourself to do. Maybe one benefit you can also have is that maybe you get a windfall. Maybe you are going through your Christmas. We are going to the end of the year. There are some bonuses that are paid. You don't blow all. You could take a portion of it, maybe half of it, and then push it there. That will hasten the process of meeting your target. But it is very good if you do it step by step and you are building that habit, because it will come in handy later on. Okay, so once you are doing it step by step, but any windfall you get to, you can push it to that place. If you are fine with pushing all of it, fine. But the danger is that you push all and then you find out that you need money to do something, or then you are now going back again to land on it. So that's why I said probably split the windfall into two, push some into the emergency fund, and then keep the other half or other part for whatever it is you want to sort out with. So I feel that with these step-by-step processes, you can gradually build up to reach either the 3 months, and once you hit every milestone, just increase your target again and build towards it. Okay, and then gradually, before you know it, you have your 6 months emergency fund. But I think for the average young person who is an individual or a single person, if you are just single, you don't have any major dependence or whatsoever, probably a 3 months cover is fine. 3 months emergency fund is fine for the time being until your circumstances start changing, and then you start to expand and reach for more. Especially if you are in a stable income job, you can do that. Then after you've hit 3 months, you can slow down the process of building up. You can still continue, but you can slow down. Maybe if you are contributing 200 or 500, you can halve it, because now you have achieved a certain level, and you can now start investing in other areas. Yeah.
Brilliant. You've covered almost everything from building it to the common mistakes. I don't think there's anything else to say, but yeah, that was a good submission, Adam. So, key takeaways: try to automate your savings. It doesn't matter. Just like Adam said, the goal is not to earn interest on it. You are just building your buffer, right? So, if possible and if available to you, set up a direct transfer from your paycheck to your separate savings account. So most of these banks now offer e-savings along with your account. So you can set up a standing order that can go, or direct transfer that can go from your paycheck to the separate savings. For some people, as Adam said, they can have the debit card. It won't affect their spending. For some people, once they see the money, they have to spend it. So if you are someone that lives by out of sight, out of mind, then try to automate it, or automate most of your savings as possible, so that you don't see them and you're not tempted to spend them. And a very important mistake that people make, which Adam highlighted on, was with using your emergency fund for non-emergencies. It's tempting, to dip into some of these things for something you really like, a new gadget that you've really been eyeing, or a trip, or something which is not really an emergency. It's more of something that your heart desires, and once you use your money for that, it defeats the whole purpose of your emergency fund. And so you should really sit down and then plan for some of these things. Know what is an emergency for you, and don't dip into your emergency fund for non-emergencies. And also another mistake you also mentioned, which I noted down, was to separate your checking account from your savings, which you've mentioned already. And so, one also important point is to make sure that you are the only person that have access to your emergency fund. If it's, and then I would like to have your thoughts on it. Can couples have a joint emergency fund? Because it's something I've really been thinking about. If I'm married, can I have a joint emergency fund with my wife, or do we have to keep separate emergency funds? What are your thoughts on that?
Well, I think it's a matter of how you are running your finances as a couple in the first place. If you are running a joint financial system, then it goes without saying that the emergency fund too is a joint emergency fund. You understand? There is the joint running of the house, where there are couples who pool all the money together and run their finances together, everything, like Dave Ramsey advocates on his show. Okay. Then there are also others who have another way. Some to say, okay, there is something for the house. You bring this amount, I bring this amount, and then that jointly runs the house. They all have their individual amounts of money that they do. So in that case, they might have three for that scenario. I see it having like 3 levels of or 3 emergency funds, where the man should have his own emergency fund, the woman will have her own, because they are all having their personal money. Then that's joint family expenses or whatever they are running to. They also have to run their own. Do you get it? I mean, for the family. Then for those who run completely separate finances, where the husband doesn't know how much wife is earning, wife doesn't know how much husband is earning, they are in there. It's just that you take care of this, you take care of it. And then each of them will also have to have their own emergency funds, because whatever it is that can come up, they will all have to be able to handle it on their own individually. So I think it's just a matter of how it's run. Okay, how the family is running their finances in the first place. That's what comes to mind. So if you are going for a joint way of running the family, then it definitely has to be joint, because the joint way does not allow for any personal stuff. Your money is my money, my money is your money. We've lumped everything together. Where you are going separate, you've also separated everything. So it's all a matter of how you are running it. Yeah.
Yeah, that's brilliant. That's brilliant. So I think it boils back to the conversation that, consider your own personal situations and your unique situations and see what works for you. If the joint emergency fund will work for you, why not? If you think keeping separate emergency funds will be better, why not? The goal is to have an emergency fund. The goal is to not be stranded when there's an emergency. So however you reach that goal, that is up to you. Either of them works. And so, another important tip that I then mentioned, I forgot to recap, was to try not to lock your emergency fund in a long-term investment. It defeats the whole purpose, because emergency funds are meant to be liquid. You can access them when there's an emergency quickly. But if you lock them in a long-term investment, which will be very hard to redeem, it will be really hard. It will be really hard to cater for that particular emergency at that point in time. And so try to find, if your strategy is to invest in short-term investments, try to find very short-term ones as possible. If that's your strategy to invest your emergency fund, try to do that. Find very short-term, so that in case of emergencies, which you don't know when they will happen, you can cater for them as well. And so I think, wrapping up, it's been a very valuable discussion. And I don't know, Adam, do you have any final words for our audience, for those now about to build their emergency funds, to those that have made progress with it? Any encouraging words for them?
Yeah, I think one last thing I would say before wrapping up is that as when I was talking about how to build, finally, I think I should draw the point that you should define what your emergencies are, okay, from the get-go. So that it's not when somebody calls you and says, I need some urgent 300, then you are going to dip into your emergency fund to give the person money for their urgent 300. You should define it, because emergencies should be clear. Maybe medical emergencies, your car repairs, those kinds of things, that even the car repairs and some of these things, some you can avoid them, because maybe if it's, let's say, servicing, okay, you could actually have what we've been talking about, sinking funds towards that, where in that case, every month you put aside amount of money for repairing your car, okay, because we normally would plan for maintenance and everything. It's something that can be planned, but where maybe an unexpected kind of repair or beyond what you you expect happens, then you can rely on your emergency fund. So it's very important to clearly define. And another thing too is that in order to help your cause, okay, you can rely on insurance too. Okay, it takes away some risk where you are able to insure yourself from certain risks. Like for example, health insurance. In Ghana, there's the NHIS. Okay, I know there's a whole lot of talk about it and everything. But if you should go to the hospital and you don't have NHIS, you would see the kind of cost you will come home with. Okay, or if you don't have any form of insurance, if let's say where you work, there's some kind of insurance that is there, you can take advantage of these things. That will help when you fall sick, take off certain burdens. Maybe in the case where the insurance doesn't cover every single thing, and then you would now have to pay top-ups. But imagine you have to cough up amounts for everything. When you don't have insurance and you go to the hospital, it's very, very, from coughing in front of the nurse to seeing the doctor to everything you'll be charging you, and you would come home with a bill that you will be very surprised about. So you can take advantage of some of these things. If you are a salaried worker in this country and they are deducting SNIT from you and you are not taking advantage of the health insurance scheme, then it's you are being cheated, because you contribute towards the National Health Insurance Scheme through your SNIT contributions. So take advantage. If you're a SNIT payer, it's even cheaper to renew. It's, I think, about 6 cedis or so to just renew for a whole year. It might at least take care of some para and certain things when you go and consultation, when you go and see the doctor. So it's fine. Take advantage. If your office too has whatever it is, you need to go through some processes to register certain things and take advantage of some benefits. Take advantage of that. That will cut off some of these unexpected emergencies and reduce the scope of your emergency fund. Okay, then you can be able to walk around. And your car insurance, make sure that it's always, you are always covered. Don't let it expire, and then the accident will happen at a point when you have the thing expired. Oh, only last week expired, and you've had an accident today, and now you are faced with having to do car repairs when you've been paying insurance all this while. All this will also take care of some kinds of emergencies that might happen. So then, if you can take advantage of these things, take advantage of them and reduce the scope of the things that your emergency fund has to do. Yeah, so I think that would be my closing remarks on these things. Yeah.
Thank you so much, Adam. Thank you so much. And maybe we might have to plan for a different session to remind our audience on taking advantage of some of these insurance benefits and all of that. But that was a very great point and a great reminder to also take advantage of the little things, the little advantages you may have, because without them, you don't know how much it will cost you. So thank you so much, Adam, as always. You were on fire today. And thank you so much to our audience for joining us. Mr. Berkeley, as always, thank you so much for making the time to join us. Conversation beneficial. Please share this episode with your friends and family. And also, when you get to Instagram, before you even do whatever you want to do, please go to your search button and search for investment_friend. And there we have savings challenges, investment challenges. We have content that help you build your emergency fund brick by brick. And so if you are starting out with arranging your finances, with your budgeting, with your emergency fund, whenever you hop on Instagram, go to your search button, search for investment_friend, and let us help you on your financial independence journey. And until next time, thank you so much. Remember to stay financially secure, and also remember that your emergency fund is your financial lifeline. Next week, we will bring you another exciting conversation, so be on the lookout. Thank you so much for joining us, and see you next week. Bye-bye.
Thank Thank you for taking the time to listen to our thoughts. I hope you learned a thing or two and start practicing. Don't forget to follow us on Twitter, Instagram, Clubhouse, and Facebook. And subscribe to our YouTube and podcast. Do tell a friend about Money Convos so we all become wealthy together. Talk to you soon. Bye.